Imagine walking into a dealership just a couple of years ago. The sales floor was buzzing, cars were selling above sticker price, and buyers were lining up for vehicles that, frankly, weren't even in stock yet. People were paying thousands extra just to get their hands on a car. It felt like the market would never slow down. But here's the shocking twist. Fast forward to 2025, and that same dealership is desperate to move inventory. Prices are slashed, incentives are everywhere, and cars that once sparked bidding wars are now sitting untouched for weeks. So, what happened? The warning signs were always there, we just didn't want to see them. Automakers pushed production into overdrive after supply chain shortages in 2022, pumping out more cars than the market could realistically absorb. At the same time, interest rates climbed higher, making monthly payments brutal for many families. And as the cost of living kept rising, buyers started to pull back. Demand softened, but supply kept climbing. That's not just a slowdown, that's a recipe for a collapse. Then there's the used car market. Remember when used cars were selling for more than new ones? That bubble couldn't last. Leasing returns are flooding back into the market, repossessions are on the rise as people struggle with high payments, and suddenly there are far more cars available than buyers who want them. When supply explodes and demand shrinks, prices only go one way: down. Another red flag? Automakers themselves. Many have quietly admitted in their earnings reports that they overestimated demand. Dealers who once bragged about waiting lists are now sitting on bloated lots. Incentives, once a thing of the past, are back with a vengeance. 0% financing, cashback deals, and discounted leases are popping up everywhere. It's the kind of marketing we haven't seen since the last financial crisis. But the biggest warning sign of all? Consumer behavior. Younger generations are less interested in owning cars, especially in urban areas where ride-sharing and public transit make more sense. Seniors, on the other hand, are downsizing or holding onto cars longer. Combine that with sky-high insurance rates and expensive repairs, and suddenly car ownership feels like a burden, not a necessity. The writing is on the wall. The car market in 2025 isn't just cooling, it's collapsing. And while dealers and automakers try to spin the story, the reality is clear. Prices are falling like crazy, and the dynamics of car ownership are changing faster than most people realize. But here's the real twist. 2025 isn't just another dip in the market. It's the perfect storm. A combination of economic, cultural, and industry factors that make this collapse unlike anything we've seen before. Every car market has ups and downs. We've seen recessions, oil crises, and even the 2008 financial meltdown shake the industry. But what's happening in 2025 is on a whole different level. This isn't just a normal correction. It's a once-in-a-generation reset. And here's why. First, let's talk about interest rates. Over the past few years, central banks kept rates high to fight inflation. That means car loans are more expensive than ever. What used to be a comfortable $400 monthly payment is now closer to $650 for the same vehicle. For middle-class families already stretched thin, that's a deal breaker. Fewer people qualify for loans, and those who do often back away when they see the payment breakdown. Demand dries up. Second, oversupply is crushing the market. Automakers, eager to recover from pandemic-era shortages, ramped up production aggressively. By 2024, car lots were filling again, but by 2025, they were overflowing. New models, old models, and even EVs are all fighting for attention. Dealers who once had no inventory now have too much, and the only way to move it is through massive discounts. Third, there's the EV factor. Just a few years ago, electric vehicles were rare and exciting. Today, they're everywhere. But the technology is changing so fast that yesterday's EV feels outdated compared to the latest models. Buyers are hesitant to commit, worried their car will lose value the moment they drive it off the lot. That uncertainty stalls sales, especially for those already nervous about range, charging infrastructure, or battery life. Then we can't ignore the used car flood. Lease returns, repossessions, and owners trading down to cheaper models are dumping cars back into circulation. The used market, which was overheated during the pandemic, is now collapsing under its own weight. Cars that sold for inflated prices in 2021. 2022 are suddenly worth thousands less. That loss of value isn't just painful for sellers, but it also scares new buyers who don't want to repeat the mistake of overpaying. And perhaps the most overlooked factor, changing consumer priorities. Younger generations don't see cars the way their parents did. Many live in cities with rideshare options, bike lanes, and public transit. To them, a car isn't freedom, it's a financial burden. Insurance costs are up, gas prices remain unstable, and maintenance is no small expense. More people are choosing to skip car ownership altogether, shrinking the buyer pool just when the industry needs it most. Add it all up. High interest rates, oversupply, rapid EV evolution, a flooded used market, and cultural shifts. And you get the perfect storm. Prices don't just dip in this environment, they collapse. And here's the kicker. This collapse doesn't hit everyone equally. Some buyers will suffer while others will walk away with the deal of a lifetime. Every market collapse creates both pain and opportunity. The car market in 2025 is no exception. Some groups are being crushed under the pressure of falling prices, while others are finding golden opportunities that haven't existed in years. Let's break it down. The losers, who's hurting the most. First on the losing side are dealers. For years, they enjoyed sky-high markups and customers willing to pay over sticker just to avoid waiting lists. Now, with lots overflowing, they're slashing prices and offering incentives that eat into profits. Many smaller dealerships are struggling to survive, especially those carrying too much unsold inventory. Then there are recent buyers. Anyone who purchased a new or used car at inflated prices in 2021 and 2023 is feeling the sting. Vehicles bought for $35,000 are now worth $25,000, like or less. That negative equity traps people in loans where they owe far more than their cars are worth. For families already stretched, it's a nightmare scenario. Automakers are also facing tough times. Companies that invested heavily in EV production without fully gauging demand are sitting on vehicles they can't move. Some brands overbuilt SUVs and trucks, assuming consumer appetite would never waver. Now they're staring at mountains of unsold vehicles, forcing them to slow production and cut jobs. And let's not forget lenders. With repossessions climbing, banks and finance companies are left holding cars they have to resell at huge losses. The financial side of the industry, once flush with profits, is now scrambling to limit damage. The winners, who's smiling in 2025. But while some suffer, others are seizing the moment. At the top of the winners list, buyers who waited. Anyone holding off during the pandemic madness is now walking into dealerships with leverage. Cash buyers in particular have never had more power. Discounts, low-interest financing incentives, and dealer desperation mean huge savings. Used car shoppers are also winning. With so many lease returns and repossessions hitting the market, there's a glut of affordable vehicles. Cars that were unattainable just a couple of years ago are now within reach for middle-class families and younger drivers. Another surprising winner? Repair shops and aftermarket businesses. As people hold onto older cars longer, demand for maintenance, repairs, and upgrades rises. Mechanics are thriving in this downturn because not everyone wants or needs to buy new. And then there are savvy investors. Some are scooping up undervalued used cars to flip when prices stabilize. Others are buying into automakers' stocks at rock-bottom levels, betting on long-term rebounds. As with any collapse, those who keep calm and plan strategically often come out ahead. So 2025 is creating clear winners and losers. But there's one group caught in the middle. Everyday consumers confused by headlines, unsure if they should buy now or wait longer. And here's where things get interesting. Because the truth dealers won't tell you could make or break those decisions. Walk into a dealership today and the first thing you'll notice is the polished smiles. Salespeople will tell you now is the best time to buy, point out financing deals, and highlight limited time incentives. But here's the truth they won't admit. Dealers are under pressure like never before, and they're desperate to move metal off the lot. One of their favorite tricks right now is the discount illusion. They'll show you a car marked down $5,000 and frame it as a massive deal. What they won't say? That same car was inflated by $10,000 during the pandemic boom. In reality, you're not getting a gift. You're just finally seeing prices return closer to normal. Then there's the financing trap. Dealers often make more profit from loans than the cars themselves. That's why they'll push you toward long-term loans, 72 or even 84 months. Sure, it lowers your monthly payment, but it locks you into years of debt on a car that's losing value faster than ever in 2025. Many buyers end up upside down, owing more than the car is worth halfway through the loan. Dealers won't spell that out. Another hidden truth? Incentives aren't generosity, they're survival. 0% financing, cashback bonuses, and extended warranties are back because automakers are desperate to clear inventory. Dealers present them as perks, but they're really signals of a struggling market. If you know how to read them, you can use them to negotiate even more aggressively. And here's a big one. Dealers know what's coming next. They see the overstocked lots, the trucks full of new cars rolling in, and the declining foot traffic. Many are already bracing for deeper price cuts in the months ahead. But will they tell you that waiting might save you thousands more? Absolutely not. Their goal is to close the deal today before the market falls further. Finally, there's the trade-in trap. Dealers will often give you a lowball offer for your current vehicle, banking on the fact that you don't know its true value. In 2025, with used prices collapsing, they're trying to protect their margins by squeezing you on both ends, discounting the new car slightly while underpaying for your old one. If you don't do your homework, you'll lose money twice. The truth is simple. The car market in 2025 is tilted in the buyer's favor, but only if you know how to play the game. Dealers won't guide you, they'll spin the story to protect their bottom line. So what should you do? How can you take this collapsing market and turn it into the best car buying opportunity of the decade? That's exactly what we'll break down next. So here's the big question. With the car market collapsing in 2025, what does this mean for you? Is it a disaster waiting to happen? Or the best chance in years to score the deal of a lifetime? The answer depends on how smartly you play your cards. First, let's talk timing. In a falling market, patience pays. Prices are already dropping, but with oversupply building, they're likely to fall even more in the coming months. If you can hold off, especially on new cars, you could save thousands. Dealers will keep sweetening offers as pressure mounts to clear lots. Waiting even 60-90 days could mean the difference between a good deal and a steal. Second, if you're in the market for a used car, 2025 is a goldmine. With lease returns and repossessions flooding the market, buyers have the upper hand. Do your homework, check pricing guides, compare listings online, and don't settle for the first offer. Dealers are desperate to move inventory, so negotiate hard. Cash buyers in particular have enormous leverage right now. Third, protect yourself from the financing trap. Avoid ultra-long loans that keep you locked in debt while your car loses value. Instead, aim for shorter loan terms, or better yet, pay cash if you can. Remember, the longer you stretch out the loan, the more risk you carry if prices continue to fall. Fourth, don't fall for the trade-in trick. Before stepping into a dealership, get multiple appraisals for your car from online platforms, local dealers, or private buyers. Use those numbers as ammunition in negotiations. Dealers will lowball you, but when you walk in prepared, you flip the power dynamic in your favor. Now here's the best part. If you've been dreaming of upgrading, 2025 could be your year. Vehicles that were once out of reach, luxury sedans, high-tech SUVs, even EVs, are suddenly becoming more affordable. As competition heats up, you can aim higher for less money. Just be mindful of resale values. Stick with brands known for reliability and avoid niche models that may depreciate faster. For seniors or families on fixed budgets, this collapse is actually a blessing. Cars are safer, more comfortable, and more advanced than ever. And now they're cheaper too. With the right strategy, you can secure a vehicle that fits your lifestyle without overextending financially. The bottom line? The car market collapse in 2025 is shaking the industry to its core, but for smart buyers, it's a rare chance to win big. Dealers won't admit it, automakers won't highlight it, but the reality is clear: the power has shifted to you. So don't rush, do your homework, and walk into that dealership knowing one thing. In 2025, the market needs you more than you need it.